Come back, and thank you very much for staying with us right here on News Today. Time for now for us to look at what's happening in the world of business. You'll remember that reappointed Finance Minister Pravin Gordhan moved swiftly to calm markets on Monday, saying that sticking to spending targets was sacrosanct. And although his appointment was widely welcomed, Fitch Ratings offered a stark reminder of how difficult his task would be in rebuilding investor confidence. So after a bloodbath on local markets and the rents plunged to new depths, President Jacob Zuma replaced Finance Minister of 4 days, Desmond van Rooyen, with Mr Gordhan. And domestic markets and the rent rebounded dramatically. So we'd like to take a closer look at this scenario and analyze it. We have Jacques Magliolo, who is in our Cape Town studios. Thank you very much for joining us. We know that with your background, you're an investment and corporate strategist, and you have authored many books such as Millionaire Portfolio and Become Your Own Stockbroker. Now, when you come to the practical application of the theory that is in your books, what is your interpretation of the market reaction since last week Friday? And how would you describe the mentality of investors during this time of market volatility?
Well, Colin, good afternoon. Let's not undermine how the markets have reacted relative to the political news. Just understand that when you analyze markets, there are 4 major environmental factors, of which 3 are critical to South Africa, and that we look at business, economic and political variables. Under politics, well, we know what's happened. South Africa lost 171 billion rand due to the finance minister debacle. But when you look at even more critical factors like the economics, under economic variables, we would look at inflation, interest rates, the rand exchange rate. We'd look at things like commodity prices having fallen due to China's decreased production. And the business, well, business confidence has just dropped to a 16-year low. And we've got to ask ourselves, how do these variables, all these variables put together, will really affect our markets? And we have to put it in brutal perspective. The political variables and the which we include labour unions this year were obviously horrendous and have influenced more of our market sentiment and global sentiment towards South Africa than the actual impact it will have directly on the stock market. Remember that the stock market is the leading indicator of the economy, not the other way around. So any fundamental issue that is economically based or politically based will have a temporary effect on our market. So we saw that with Governor being reappointed as finance minister. There was almost an immediate reaction of the markets. So we have to ask ourselves if we have to be realistic and true to being analysts. We have to ask ourselves what will the ultimate long-term effect of this financial debacle in South Africa.
Mm-hmm. Now, the market,
if you see that.
Okay, well, sorry to interrupt you there. I just want to get an understanding, because now on the flip side, the markets have recovered slightly. So when are we going to see them retracing their steps back to the initial state where they were before Friday last week? Because I would gather that nothing has changed in terms of the prudent government fiscal policy that was in place when Klantlanen was still in office. Now that Pravin Gordhan is back and then Mr van Rooyen is out, it means that it's only the change in personalities but not government programs. Can we expect the markets then to go back and say, oh, well, things have been solved on the political side, now on the financials, let us go back to the basics?
Over time, remember that the market is ruled by 2 basic variables, and that's the actual companies and the collective basis of companies that make up the stock market, and investor sentiment. That investor sentiment has been dented badly. So it'll take time to recover. And to answer your question more directly, we have to look at international markets and how they will affect South Africa into the new year. If you take the US markets, for instance, and the potential of interest rate hikes, you've got to ask, how will that really affect our markets? Because remember that America has a 2.5% interest rate at the moment. Even if they double that, how will that really affect our markets, or their markets for that matter? Remember that 2016 is an American election year. We expect a lot of promises made by politicians which will affect their markets. In addition, which seems to be a very little known variable, in America there is some $11 trillion sitting in zero-rated interest rate banks. That money has to go somewhere. And we expect it to go to two places mainly. One, emerging markets, and obviously that will impact South Africa from a commodity point of view. And secondly, back into the US stock markets, which means that we'll go into an 8-year bull run. I truly believe that those variables, together with quantitative easing in Europe, will see those commodity prices rise. Remember that quantitative easing in Europe was massive, and that alone will result in major building, major construction, and maybe replace some of the lost demand for commodities from the Far East.
All right, so should we expect an interest rate hiking cycle if the Federal Reserve decides to hike the rates this week?
I think so. We should be expecting high inflation next year, interest rates rising. These are obviously economic variables that will affect our economy and ultimately the man in the street. But remember that if we look at demand for, or the sale of our commodities into the European markets, even to the international markets, we are charging in dollars, and our rand exchange rate has depreciated, so that will minimize some of that impact.
All right, so where do you see the South African economy and economic strength going in the next year? I believe that some confidence has been restored now that at least the markets understand that Pravin Gordhan is back on the hot seat of finance minister. He's been there before. It means that then we can then move forward. But then move forward, what are the guarantees? What are the pitfalls? What can we expect?
From a stock market point of view, well, remember our markets are controlled by institutions. Some 85% of our stocks are controlled by the local market. And then there's obviously the international demand and trading of our stocks. So there is something like 65% of our market controlled or traded by foreigners at the moment. That won't change. And I think that if you look at the high PE ratios that we have at the moment, going into 2016, we should see, as is with normal cycles, an increase in IPOs. Initial public offers or new companies listing will grow next year, which in itself is an indication of the confidence of South African entrepreneurs in our economy. When it comes from an economic point of view, that's going to depend on whether in next year's budget, whether they're going to push up taxes. There is discussion that maybe VAT will be pushed up to 15%. That will impact on everything, I suppose. Yeah.
Right. Mr. Jacques Magliolo, thank you very much for talking to us, and I look forward to analyzing economic prospects for 2016 in the coming year. Thank you very much for talking to us.
Thank you for having me.